And you know what? I love mortgage lending.
Absolutely. And everybody has to love what you love.
And you know what? You need to love what you do, and you don't work a day in your life.
If you love what you do.
That's true.
This platitude brought to you by
Clinton Wilkins Mortgage Team? I don't know. Or it could be the Todd Vino Show. You can listen to it, Monday to Friday, City News.
There you go. Nice plug. So when it comes to mortgage rates, what do you not do?
Dun, dun, dun. What you need to not do is, listen to your coworker. Maybe listen to your parents and, just renew with your lender. Don't do any of those things.
Yeah.
Also, 60% of Canadians take a 5-year fixed rate. I do not think that's what you should do in every case. In some cases, yes, that's within your risk tolerance. Personally, Todd?
Yes.
I think the rates are kind of high right now.
Right.
What is most popular, and I'm going to let this secret out,
yeah.
Most borrowers are doing like a 3-year fixed.
Yes.
Still, there's a lot doing a 5-year fixed, and there's still a lot doing variable. And I'll tell you why. The people that are in the 3-year fixed, they think the rates are going to go down. It gives enough time to kind of get through this hump, see where things are going to be, and they're going to restructure at that point. We're seeing some people doing a 3-year fixed, transferring from one lender to another, leveraging them being a new customer and kind of getting a good rate. Mm-hmm. And we're seeing some amortizations being extended, to 25 years. Not everyone, but some. Some borrowers are choosing to do a 5-year. There are some even lower rates. The 5-year, 4-year are lower than a 3-year and shorter. Mm-hmm. And the reason that they're doing that is they want to just set it and forget it. Right. Certainly not for everyone. Yeah. And you need to know you should not break that mortgage. Do not break it. Because if you break that, you're going to pay a big penalty, especially if the rates go down. And the reason why borrowers are taking a variable rate still, Todd, you might ask me, why would they? The rates are higher.
Right.
Why would I possibly take a variable? One reason, you might break your mortgage early. The penalty will be only 3 months interest.
Right.
The other reason is you might convert into a fixed down the road when the rates go down.
Right.
You can convert from a variable into a fixed anytime.
Right.
We're not seeing a lot of borrowers doing a 1-year, and we're not seeing a lot of borrowers do a 2-year because those rates are quite high, somewhere up to around that 6% range. So if you're going to do that, you might as well do a variable.
So when would a 1-year be applicable for somebody?
If you know that you're exactly going to redo that mortgage in 1 year.
Yeah.
But honestly, we're doing very, very few 1-year fixed right now. Very, very few. I can't even remember the last one we did. And this is coming from the guy who always did a 1-year fix for himself. Yeah. Honestly.
Why did you always do a 1-year fix then?
My life's so uncertain. I was buying, selling, trading.
Right.
And typically when you're further along in your 1 year, you're going to get, 3 months interest to break it. Yeah. So similar to a variable. I was either a variable or a 1-year fixed guy. Right now, my mortgage, I am in a variable. So if that gives any solace to the listeners that are in a variable rate, the mortgage professional who's done $1.4 billion worth of mortgages here in Halifax and across, really across the region is in a variable, that should give you some solace. I do think that the rates are going to soften. I do think the Bank of Canada will, soften the rates once we start getting into a recession type situation. And I also might break my mortgage. I will just put it out there. I am not sure what I'm doing with my life. I might keep the place I'm in. Mm-hmm. I might refinance it, or I might sell it. I don't know. We'll see.
Right. What about having an open
term?
Open term, yeah.
An open right now is 8-9%.
Yeah. So what would be a
why would you do an open?
Why? Yeah.
You would do an open if you think you are going to break that mortgage in less than 5 months. 6 months or less, we'll say.
Right. Yeah.
If not, you should do a variable because the variable with the 3 months interest penalty is going to be cheaper than you paying that rate at that open term.
Yeah. Yeah, absolutely. Okay, so you mentioned, I think you said it's 60% of people
take a 5-year fix. 60% of Canadians take a 5-year fix.
And why is that?
Take variable or shorter term.
And do you feel that's just kind of bank marketing, or is that just people don't think it through?
It's cultural. It's the industry. It's marketing.
Right.
Us as Canadians, a 5-year is just what you're told. That's the standard offering. You go and apply, a 5-year is what you're going to get.
Yeah.
But you need to ask for something different, or you need to shop around.
Right.
And I specifically urge these borrowers that have a mortgage coming up for renewal this year, please, please, please just don't take what you're given.
Yeah.
Because there is a wide range of what is available out there in terms of pricing. And, when you come up for renewal, it's a great time to look at your amortization, look at your equity, maybe change the type of product that you're in. And, the rates that are available between different lenders, believe it or not, Todd, there is a big variety.
Yeah. Yeah.
It would shock you.
Right.
It would shock you.
Okay, so you're telling me that if you walk into a regular bank branch and you sit down with somebody, they're going to put a 5-year fixed in front of you. That's probably
that is the most normal rate.
So they
most
won't have
common.
so they won't have a conversation with you to say, okay, we want to assess where you're at, where you're all of that generally.
I'm not saying that every
Yeah.
mortgage broker or every banker is the same.
Right.
It's the 80-20 rule, just like everything else. 20% are doing 80%.
Right.
But what about the other 80% of people
Right.
that are only doing a few? They're going to go to the default. They're not going to know to ask you about what's going on in your life.
Yeah.
What is your plan? Are you staying in this house? Do you plan on breaking this mortgage early? Do you have any need to refinance? Do you have any need for funds, in the next X number of years? Product and, setup and rate product really make a big difference to your cost of borrowing, over the life of your mortgage. And I think you need to answer these key questions. And some of these questions I can't answer for people. I can tell you right now, typically what I do is I'm looking at everyone's income, assets, and credit. I'm giving them 3 suggestions on what my recommendations are. I get to talk to clients every single day. So I can look at these different scenarios. I can very quickly, look and say, okay, this is what you have for equity. This is what your goals are. Here are my recommendations. And then you noodle on it at home with you and your spouse or you on your own and decide what's going to work and then come back to me. This is why I get a lot of my documents up front so that I can give a very good recommendation. I know what's going on with their assets. I know what's going on with their income and their credit, and I can put that recommendation together.
All right, but I guess fundamentally, should that not be what your experience is as a consumer when you walk in, or as a client when you walk into a bank?
It should be, but not every employee is the same.
Yeah.
Just like not every mortgage broker is the same. Not every bank is the same.
Right.
So, you need to ask the questions, and you need to be an advocate for yourself, or you need to go to someone who's going to be a strong advocate for you. And that's why I'm such a believer in, seeking the advice of an unbiased mortgage professional. And this show is not you need to call Clinton to do your mortgage show. This is a show to provide education, and hopefully we're educating consumers. I certainly get the feedback, Todd, and I know you've received the feedback too.
Yeah.
People are listening. I was doing a tour of bank branches. We do a lot of mortgages with bank branches, or with banks, I should say. And I don't want to discount the banks. And I'm talking about all of the big 5. They're either in the broker channel or they're participating in the background in terms of funding some of these broker lenders.
Yeah.
And without saying their names, we deal with Big Green and we deal with Big Red every day.
Yeah.
Okay?
Yeah.
And I was in some bank branches today. I hadn't been in branches for the last couple of years. I need to get my face out there.
Yeah.
They need to remember who I am. Obviously, they can see me on a billboard or listen to us on the radio.
Yeah.
And the branch manager said to me, he's like, I love Mortgage 101. I love the education that you're doing with consumers, and they're coming in and asking us good questions.
Yeah.
And, it's good for the industry, and I think it's good for consumers. And that's why, for me, this is more of the education piece, I think, is what I love the most. And that's why we're able to keep this conversation going.
Okay, so as far as the Bank of Canada and what the bank, because people were glued to what the Bank of Canada has been doing, is that fever kind of been dialed back a bit? Has that temperature been brought down a bit from the Bank of Canada and what they're doing?
I mean, here's the temperature. The temperature is on cruise control right now. We are in a plateau type situation. But what happens, Todd, after a plateau? Typically, it goes back down. We were increase. Now we're plateau, and now we're likely going to see the rates soften. When are they going to soften? Again, I don't have a crystal ball.
Yeah.
If I did, I wouldn't be on the show. And consumers ask me, they're like, okay, what's going to go on with pricing? If I set the price, you wouldn't be talking to me, because guess what? That's way, way above my pay grade.
Yeah.
But the one thing that I do, I watch and I listen and I research things that our economists are saying. I listen to things that the Bank of Canada is putting out, and I put together my opinion, which is an opinion.
Yeah.
I am not an economist, but I can tell you after 17 years, I've seen a few of these cycles before.
Yeah.
I remember when the prime rate was 6.25%.
Mm-hmm.
I remember that. And then it went down to 2.25%. Then it went back up. Then it went back down. Yes, the rates are high today,
Mm-hmm.
but typically after a high period, there's a plateau, which we are currently in.
Yeah.
Then after that, typically they soften again. So if history repeats itself, which it normally does,
Yes.
that's really what we're going to start seeing.
At what type of time frame do you think we'll see? And do you think we'll see numbers like 2%, numbers like that again from the Bank of Canada?
There's a lot of uncertainty.
Yeah.
First off, we didn't think there was going to be a pandemic. We didn't think that what was going on in Russia and Ukraine, or Ukraine and Russia, was going to happen. And I think a good example is when some of these banks collapsed in the U.S. Okay,
Yeah.
we saw an immediate dip in the bond markets in the costs, and then the rates went down. And let me tell you, I repriced probably 40 or 50 mortgages that hadn't funded yet because we saw rates dip, reprice, and it was able to reproduce commitments to our customers at a lower rate. But guess what? They've kind of come back up again because that, a little bit of a hangover from what happened at Silicon Valley Bank has now kind of restabilized.
Yeah.
But the interesting thing, and I don't know if you read in the news, but last week TD called off a big deal to buy a big American bank.
Mm-hmm.
The numbers were just not there, and the amount that they had to pay in terms of breakage fees for their deal was significant.
Yeah.
But they made that choice to walk away from that deal because they don't want to put, the Canadian bank in peril. They don't want to put their American bank in peril. And the TD Bank Financial Group, they want to make sure that it's still going to be healthy going forward.
Yeah, we know the Canadian banking industry has always been a real beacon of strength globally, right?
We have the most respected financial institutions in the world and very strong regulatory and banking platform. And you know what? That's for better or worse. Some people think that, our banks are too rigid and too conservative, and in some ways they are. But it protects us in the more challenging times, which we just went through.
Yeah. Thank goodness for that, eh?
Thank goodness for sure.
Absolutely. Okay, we got lots more to talk about. Mortgage 101, your guide to homeownership with Clinton Wilkins and myself, Todd Vino. We'll be right back.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.